Right, hi there, everybody. Let's have a look at this week's market news, starting the 4th of June 2018. We'll start off with what's been going on last week, really. So the markets finally calmed down at the end of last week there in terms of the equity markets anyway. Italian assets rebounded with bonds recovering from catastrophic losses from earlier last week. The fallout was prompted when Italian president proposed a technocrat government in response to the coalition's first choice of finance minister, which was thrown out by the president. The coalition's reaction was to threaten the president with impeachment and to organise a day of rage across the country. Sense prevailed, though, and the coalition met again, and by Friday, a new government had been agreed and approved. Regarding the steel and aluminium tariffs, the Trump administration took no notice of the representations made from various countries to prevent the imposition of the steel and aluminium tariffs. However, the markets were less concerned about a potential trade war, which is still a possibility. It was the news of a resolution in Italy that buoyed the markets across Europe and beyond, further aided by a strong reading in the US non-farm employment data released on Friday. Most global equity markets still closed down on the week, though, but the losses were modest in comparison to the swoon at the start of last week. The technology sector defied the general mood as the FANGs hit new highs. Investors were parking funds in the overstretched but safer technology companies just in case a full-blown trade war does start to build. The EU may well be announcing tariffs on various goods such as orange juice, Harley-Davidsons and bourbon, products that are produced in the States where the sitting congressmen are against any imposition of tariffs. Trump says that a trade war between the country and the US is between any country and the US is an easy war to win, though. This is certainly not what the rest of the world wants to hear, and does certainly strike an ominous tone. With regards to the data and events this week, the week following non-farm payroll week tends to be quiet on the data front, which is certainly the case this week. All front-loaded this week with little focus on towards the latter part of the week there. In addition to the regular release of daily data, we also wait for the EU's own trade tariffs in reaction to Trump's steel and aluminium tariffs. The fear is that Trump could react again and target car imports. Any escalation would hit equities across the board and likely see the dollar strengthen. So as for the data for the week, we start off important data really being on Tuesday here. In fact, let me just get this onto daylight. I don't know why this has changed. Save. Start off really at 9:30 UK time on UK services PMI data. It's a key reading on the all-important service sector. The latest services Purchasing Managers Index will provide analysts with another piece of data as they try to fathom the depths of the UK's first quarter slowdown. Draghi's speech in Frankfurt marks the 20th anniversary of the formation of the ECB, and the US ISM non-manufacturing data reading on the services sector in the US looking for a strong rebound from last month's number as well. As for Wednesday, we have crude oil inventories, another drawdown maybe, who knows, time will tell. We'll find out on Wednesday, of course. The market still awaits details from the Saudi Arabia and Russia about plans to increase production to counter Iran and Venezuelan shortfall. On Friday, not noted on here, but we do have the G7 summit in Quebec. That's where the US, Japan, Germany, France, UK, Italy and Canada will meet and discuss a number of subjects, but also trade, and that's bound to take centre stage and could well end in acrimony following the imposition of the steel and aluminium tariffs. That's it really for the week. That's this week's market news. Have a great week's trading, everybody, and hopefully we'll see you tuning in this time next week for more. All right, all the best. Bye-bye.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.